Imagine if the US government had a massive investment fund, one that could generate billions of dollars every year, lower taxes, and even provide every American with a slice of the profits. Sounds too good to be true? Well, that's exactly what a sovereign wealth fund does for countries like Norway, Singapore, and Saudi Arabia. But could the US ever create one? And more importantly, should it? A sovereign wealth fund, SWF, is essentially a giant investment portfolio owned by a government. Countries create these funds to manage excess revenue, often from natural resources, trade surpluses, or foreign exchange reserves. The goal? To generate long-term wealth, stabilize the economy, and even fund government programs without relying on taxes or debt. The most famous example is Norway's Government Pension Fund Global, which was built using oil revenues. It now holds over $1.5 trillion in assets, making every Norwegian citizen a stakeholder in one of the world's largest investment portfolios. Other successful SWFs include Singapore's Temasek Holdings, which invests in tech, real estate, and infrastructure, and Saudi Arabia's Public Investment Fund, which bankrolls projects like the futuristic city of Neom. So why doesn't the United States have one? At first glance, a U.S. sovereign wealth fund seems like a no-brainer. If the government earns billions from investments, it could reduce the need for high taxes. The U.S. relies heavily on debt to finance government spending, and a SWF could provide a self-sustaining revenue stream. By investing in diversified assets, the U.S. could secure funds for future generations, much like Norway's oil fund. A well-managed fund could allow the U.S. to strategically invest in tech, infrastructure, and key industries, strengthening its global economic dominance. Additionally, such a fund could help shield the economy from financial crises by providing a buffer against recessions, much like how Norway's SWF protected its economy during the 2008 financial crash. One major advantage of a US SWF would be its potential role in reducing economic inequality. A portion of the fund's profits could be distributed to citizens as annual dividends, similar to Alaska's permanent fund, which pays residents a yearly check from oil revenues. Imagine every American receiving a share of a national investment fund. This could significantly improve financial security, reduce dependence on government welfare programs, and provide a safety net for lower-income households. The fund could also be used to finance public goods, such as infrastructure, education, and healthcare, without raising taxes. But there are reasons the U.S. doesn't already have a SWF. The biggest obstacle is politics. Unlike Norway, where oil revenues go straight into the wealth fund, the U.S. government spends nearly all of its tax revenue each year. Even if the U.S. had a budget surplus, deciding how to invest that money would be a political nightmare. A U.S. SWF would have to invest in private assets, potentially leading to government interference in the stock market. That raises concerns about fairness and corporate favoritism. The U.S. struggles to agree on basic fiscal policies. How would Congress agree on what to invest in? Furthermore, there's the question of where the money would come from. The U.S. doesn't have oil revenues like Norway, so a SWF would require new funding sources, such as a wealth tax, excess corporate profits, or even issuing government bonds. Investing always carries risks. If the government made bad investment choices, taxpayers could be on the hook for massive losses. There's also the ideological debate about government involvement in the economy. Some argue that private markets operate more efficiently than government-controlled investments. A US SWF would raise concerns about whether the government should own stakes in private companies and whether such ownership would lead to unfair advantages or political manipulation. For example, if the fund were to invest in large American tech companies, would it be able to remain neutral in regulatory decisions? Would political parties use it to push their agendas? These are tough questions that policymakers would need to address. Even with these challenges, a U.S. sovereign wealth fund isn't impossible. If created, it could be modeled after successful funds worldwide. The U.S. could allocate a portion of federal budget surpluses, excess corporate taxes, or carbon taxes into the fund. The fund could focus on U.S. infrastructure, AI, clean energy, and strategic industries, ensuring returns while strengthening the economy. To prevent political influence, an independent board, similar to the Federal Reserve, could manage the fund, making investment decisions based on economic rather than political motives. Profits could be reinvested into healthcare, social security, or even dividends paid directly to citizens, like Alaska's Permanent Fund, which gives residents annual oil revenue checks. A phased approach could be another way forward. Instead of launching a massive federal SWF overnight, state-level sovereign wealth funds could be tested first. Alaska's oil fund is a working example, and other states with high revenues, like Texas or California, could follow suit. If successful, these state-level funds could serve as models for a national fund. Another possibility is a hybrid model where the government partners with private investors to build a diversified portfolio, mitigating risks while maximizing returns. Another potential funding source could be carbon taxes or environmental levies, where polluting industries contribute to a national investment pool. This would align financial incentives with sustainability goals, allowing the fund to support clean energy projects while generating returns. The U.S. could also consider a portion of Federal Reserve profits or foreign currency reserves as initial capital for the fund. Over time, as the fund grows, it could reduce reliance on public debt and help stabilize long-term economic growth. Right now, the idea of a U.S. sovereign wealth fund remains just that, an idea. Political disagreements, economic concerns, and the sheer size of the U.S. economy make it a complicated project. However, as government debt rises and tax burdens increase, pressure could grow to find alternative revenue sources. If designed and managed properly, a SWF could provide the U.S. with a long-term financial cushion, reduce reliance on debt, and even strengthen its global financial position. Additionally, with growing concerns about economic inequality and financial security, a SWF could be a solution to help distribute wealth more equitably among citizens. So could a U.S. sovereign wealth fund work? The answer is yes, in theory, but it would require major political will, careful planning, and a long-term vision, all things that aren't exactly Washington's strong suit. However, as debt continues to climb and traditional tax revenue struggles to keep up, the idea of a U.S. SWF might just become too tempting to ignore. What do you think? Should the U.S. create its own sovereign wealth fund, or would it just be another bureaucratic mess? Let us know in the comments below. If you found this video insightful, don't forget to like, subscribe, and turn on notifications for more deep dives into the world of finance, hedge funds, and billionaire investing strategies. This is Hedge and Haven, and we'll see you in the next one.